And again, it's scary, but you have to just kind of keep out the emotion and focus on the charts. And what you can see here is that there's this little interim support right over here at around is this is what happens in bear markets. And what I mean by that is that, we saw the Terra Luna situation, we saw the UST collapse, anything that's not made to be on a firm foundation, ultimately in bear markets, it's shown to be faulty, right? So now we're seeing Celsius. I think they're not allowing withdrawals right now, which is sending shockwaves. I mean, that's the equivalent in the crypto space of in the financial system if a bank said, hey, you can't withdraw your money. What we're seeing today in the price action is what I would consider blood in the crypto streets, which is just the same as blood in the Wall Street, kind of Wall Street period. This is where I start saying, okay, for a short-term bounce, it is starting to be likely. And again, it's scary, but you have to just kind of keep out the emotion and focus on the charts. And what you can see here is that there's this little interim support right over here at around 23,000 or so. And that's kind of what we've been dangling right on top of. So that's your short-term support on Bitcoin. I ultimately still am holding strong that I think at the high end of a target, you're talking about this 20,000 marker here. So I still think we're going there. But again, generally, you don't go straight to these levels. It's very rare to see a collapse from where we were, at 32,000 or 31,000 a few days ago or a week ago down to 20,000 that quickly. Usually you get to a level, you bounce a little bit, then you flush again. Ultimately, I still think that we could go as low as 12,000. 12,000 is this pivot going back to 2019. One of the reasons why I think you could go that low, there's actually a few. Number one is it's a measured move. So if you take this distance from this high to this low, which was basically a straight shot down, and then you do a measured move that same distance from here, let me zoom out, from here, it takes you down to 12,000. This would be the same distance repeating, which again, in technical analysis, it's called a measured move. 12,000 also is the 80 to 85 correction move, which is a standard kind of Bitcoin crypto winter, right? So again, 20,000 is my high end. That's where I start kind of accumulating a hodl position where I plan to hold it for a little bit longer. But what I'll do is I'll divide my ultimate max that I want to buy into about 5 portions. So let's just say for Pete's, for example's sake, it's $100,000. I would do 20,000 at 20,000. And then at maybe 17,000, another $20,000 worth, et cetera, all the way down. So again, there's lots of ways here. I'm still a long-term huge bull. This is kind of exactly what I was expecting. It's the .com flush out. You need to see 95% of cryptos honestly go away during this next 1 to 2 year period. It's why I've said so many times when I invest in cryptos, I generally only invest in the top 20 because the top 20 hopefully will still be around to tell the tale, just like Amazon back in the .coms. Obviously that one flourished afterwards, but I mean, it is nuts out there. There's no doubt about it. Don't use leverage. I mean, that's just the bottom line. You use leverage in a bear market, you're going to get slaughtered. Notoriously, when I'm accumulating, like I did a little buying of Ethereum today, I put 4% additional in my portfolio of Ethereum. That's it. So I do have about a 20% position in my portfolio of Ethereum here for a bounce. So here's your Ethereum chart. And again, you can see how it's leading Bitcoin. It's already taken out the 2017 highs right here. I think you have a couple levels coming up. The big one for me is going to be this $800 level right here. That's going to be a very, very big support. So again, basically below 1,000, I really start to think that there's good value here if you can say a cryptocurrency has value. No one thought it would go here. I mean, we were almost at $5,000. So at $1,000, you're basically down 80% on Ethereum, and we're getting awfully close to that, trading at 1225 right now. So yes, it's nasty, but again, if you're someone that has that long-term vision and you're not using leverage and you're trying to build a long-term accumulation portfolio, then you start to nibble. You start to nibble just a little bit and you kind of say, okay, listen, I understand that these positions could go down 50%. That's just the crypto market, right? Even from here. But if you have that view of long-term, then there's a lot more reward down the line on these good quality names. Everyone wants the big player. I mean, it's so funny, right? You see and this has always been kind of the double-edged sword for crypto, is like no one wants it to be, everyone wants it to be decentralized. No one wants these big institutions to control so much of it. But then when you get into bear market, everyone's like, oh my goodness, I hope the institutions come out and save the day. And it's like, well, in this environment, like you said, the institutions are not, this is beyond their risk tolerance, right? Yeah. They're already cutting back risks by selling Tesla and selling some of these tech stocks. They're not going to come in into something that's dropping by 20% a day and step in at these levels. Now, at some level, hedge funds who really do take risks like that, they will step in, but they wait for, the absolute collapse. They'll wait on Bitcoin to sub 20,000, probably even sub 15, like you're saying, before they step in. So I've been nibbling on Bitcoin down here, and I've been nibbling on Ethereum down here as we're getting to these kind of crazy sold short-term levels. Some of the things that I'm intrigued by is you have something called a time count here, which is 2, 4, 6, 7 straight down days in a row. If you look at charts, they tend to bounce after. If you get 7 red candles or 7 green candles in a row, you tend to get a short-term reversal in trend. It may only be short-term, but for me as a swing trader, that's an opportunity. But again, what I'm doing here is I'm not like betting the farm, right? And people are just so insane when they do this, especially in a bear market. When you're going counter trend to the market, you literally dip that toe in the water. So you're talking about, 4%, 2% of my portfolio, what I'm putting at risk initially, and then maybe I'll add another 2 or 4%. But you're not going like 10 times leverage in, praying and hoping that this is the bottom, because that's how you go broke in a bear market. And again, things have changed. Investors have to understand that the days of 2021 are now gone, because the Fed has said, sorry guys, we are not continuing to print money. And the government is in that same position. You don't have enough people saying, okay, let's do this spending bill or this spending bill. And so all of a sudden the spigot's been cut off and the market's kind of left naked, if you will. So the inflation numbers are ridiculously high right now, but the Fed has to be very careful here, because you are seeing consumers starting to recoil like they just touched a burning hot stove. All right, again, so far we're still seeing, we're always hearing, the traveling because COVID's, kind of down and over at this point. But I'm telling you right now, from what I'm seeing, people aren't driving as much as they were, because, it takes $120, $130, $140 to fill up your tank just for a few days of driving, right? And then you also have prices that are ripping higher. We know that housing has been just going nuts, so people can't afford that with interest rates where they are. And there's this massive recoil that's starting to take place, and it can force us into a recession far, far faster than anyone thinks. I went on record, I think 6 months ago, saying we could easily see a recession start by the end of 2022 into early 2023. And I think that's going to happen. As good as it is for people to earn more money and get paid more, at the same time, it does cause an increase in inflation as well. And so you have all these kind of trickle through effects. And I do think inflation will come down as people recoil. We saw, I think it was Target News last week that said, they had a huge inventory, so they were going to start marking down things. So I do think inflation eventually does come down, but people are going to react to their 401ks getting cut down by 20 or 30%. Smaller investors seeing crypto markets collapse and their portfolios down 50, 60, 70%, they're going to react to that. That's wealth effect that was created during COVID is vanishing very, very quickly. That's kind of what I'm thinking too, is I don't think it's as easy. Maybe we flush quickly to 20, but generally bear markets don't end this quickly. So I think it's got to be a little bit more drawn out. I think if you look at past bear markets in general, it's taken about 12 months from the peak on Bitcoin, for instance, to get down to its low before then it goes choppy sideways for about 6 months before it starts to kind of increase. And we're, if we look at November being the high, we're still quite a ways away from November now when a potential low could be put in. So it'll be interesting to see. And again, the more interesting thing for me is going to be, what does the Fed do when we do enter a recession if inflation is still at 6% or 5%? How do they react when they can't print ad nauseum the amount of money that they were in the past? Totally. No, it's amazing. This is definitely a market that investors need to understand. So many investors came in after kind of the 2020 flush with COVID, and they've never experienced a longer term bear market, and it's kind of a wake up call. I mean, I know you and I have been through many bear markets out there and collapses, but there's a lot of the population that hasn't been, and it's like, it's, you know, welcome to the club essentially. Unfortunately, it's a club that we don't necessarily want to be in, but it is a club that everyone becomes.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.